इस मामूली से सिगरेट बट की कीमत तुम क्या जानो रमेश बाबू। एक चेन स्मोकर के लिए ईश्वर का आशीर्वाद है ये सिगरेट बट। बेंजामिन ग्राहम की इन्वेस्टिंग की अप्रोच की शान है ये सिगरेट बट, और हर बिगिनर इन्वेस्टर का ख्वाब है ये सिगरेट बट। नमस्ते एवरीवन, वेलकम टू आवर यूट्यूब चैनल। आई एम पूजा शर्मा और आज की इस वीडियो में हम बात करने वाले हैं बेंजामिन ग्राहम की सिगार बट इन्वेस्टिंग अप्रोच के बारे में। लेट्स गेट स्टार्टेड। क्या आपने सड़कों पर पड़े हुए सिगार बट्स देखे हैं? वो सिगार बट्स जो यूज्ड होते हैं, डिस्कार्डेड होते हैं और थोड़े गंदे भी होते हैं, लेकिन फिर भी वो सिगार बट्स एक चेन स्मोकर को लास्ट पफ की खुशी जरूर दे जाते हैं। The same analogy has been used by Benjamin Graham to describe the negatively performing companies whose stock price have tumbled down to become so cheap that they are as good as the free cigar butts on the streets. So Benjamin Graham started with the cigar butt approach of investing during a time when America was facing Great Depression that was from 1929 to 1939. During this time, the shares of most of the companies traded at very low prices. The fact that the companies were not earning any profit didn't really matter. Basically, you could buy most of the companies at a price which was lower than their net liquidating value. अब ये net liquidating value क्या बला है? It is nothing but the net value of the company's physical assets if we were to go out of business today and the assets were to be sold in the market. Like I said, you could buy companies at very cheap valuation during that period of turmoil. Now, although Warren Buffett learned investing from Benjamin Graham, who was not only his teacher at Columbia University, but also his mentor throughout his life, yet interestingly, Warren Buffett differed in his investing approach from his mentors. Check out this short clip where Rajiv Thakkarji, the fund manager, is trying to explain the difference in opinion of the two.
Buffett wants to have a 5-star lunch, but he'll go only when there are discounts at the 5-star. Graham says, I'll not bother about the health risk or the bacteria and viruses. I'll only have food at the roadside eatery, but I want my stuff cheap. So there is a small difference between the approach of the two individuals. Both want things at a discount. One person wants quality, the second person wants absolute cheapness. Interestingly, sometimes what happens is you get 5-star food at roadside prices. So at those times there's no debate. Both approaches converge and you should go all out and buy things.
Anyway, coming back to how cigar butt approach came about. Benjamin Graham, unlike Warren Buffett, believed that the past and the present of the company are much more important than the future of the company. He also did not believe in giving the management of the company any added weightage over the company's value, hence came the cigar butt approach. Graham had actually given a more respectable name. He called it net-net approach or deep value investing. A net-net business is the business that is priced below its net current asset value. Now you all must be wondering, what is net current asset value? Let's take a look at the example. As you can see on the screen, this is the data for a company and we are going to look at the data for the year ended March 20. Let's take a look at the current assets. Those are at 1,687.65 crores. The current liability stands at 532.11 crores. So the total liability is 532.11 and the net current asset value will be the current assets minus the total liabilities, and the resulting answer would be 1,155.54 crores. So the net current asset value can be calculated by subtracting the total liabilities from the total current assets. That's it. Benjamin Graham's criterion was to buy stocks that traded at below 2/3 of the company's NCAV, so that even if the stock price rose up to NCAV, that is net current asset value, it would result in at least a 50% gain. This was the main motivation for investing through cigar butt approach. And this is where Warren Buffett disagreed with Benjamin Graham. In his 1989 annual letter to Berkshire Hathaway's shareholders, Warren Buffett wrote a piece called Mistakes of the First 25 Years. It is a great insight into how even the greatest investors can make mistakes. The lesson is, of course, not to repeat the same mistakes, but it seems that Warren Buffett committed the same mistake over and over by buying cigar butt companies just because they were available at very cheap rates. This approach, however, changed when he met Charlie Munger. Meeting Charlie Munger was one of the turning points of his life. It was then when Buffett coined this phrase, "It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price." Buffett realized that cigar butt investing approach to buying businesses is foolish. Because when a company is being undervalued, there must be more than one reason for the market doing so. As they say, there is never just one cockroach in the kitchen. Likewise, there is never just one, but multiple reasons behind the undervaluation of the stock. Interestingly though, Warren Buffett considered his purchase of Berkshire Hathaway as a cigar butt investment. Check out this short clip where he sums up everything we've discussed till now.
The biggest, but buying Berkshire Hathaway itself was a mistake because Berkshire was a lousy textile business. And I bought it very cheap. I'd been taught by Ben Graham to buy things on a quantitative basis. Look around for things that are cheap. And that I was taught that, we'll say in 1949 or 50. It made a big impression on me. So I went around looking for what I call used cigar butts of stocks. And the cigar butt approach to buying stocks is that you walk down the street and you're looking around for cigar butts and you find this on the street, this terrible looking, soggy, ugly looking cigar, one puff left in it. But you pick it up and you get your one puff. It's disgusting, you throw it away, but it's free. I mean, it's cheap. And then you look around for another soggy, one puff cigarette. Well, that's what I did for years. It's a mistake. Although you can make money doing it, but you can't make it with big money. It's so much easier just to buy wonderful businesses. So now I would rather buy a wonderful business at a fair price than a fair business at a wonderful price. But in those days, I was buying cheap stocks. And Berkshire was selling below its working capital per share. You got the plants for nothing, you got the machinery for nothing, you got the inventory and receivables at a discount. It was cheap. So I bought it. And 20 years later, I was still running a lousy business, and that money did not compound. You really want to be in a wonderful business, because the time is the friend of the wonderful business. You keep compounding, it keeps doing more business, and you keep making more money. Time is the enemy of the lousy business. I could have sold Berkshire, perhaps liquidated it, and made a quick little profit, one puff. But staying with those kind of businesses is a big mistake. So you might say I learned something out of that mistake, and I would have been way better off taking what I did with Berkshire is I kept buying better businesses. I started an insurance business, See's Candy, the Buffalo, all kinds of things. I would have been way better doing that with a brand new little entity that I'd set up rather than using Berkshire as the platform. Now I've had a lot of fun out of it. I mean, everything in life seems to turn out for the better, so I don't have any complaints about that, but it was a dumb thing to do.
So to summarize our learning, the cigar butt approach of investing suggests that you invest in a share but try to keep a considerable margin of safety that can provide you a great deal of cover at all times. Like I said, later in life, Warren Buffett changed this approach, and instead of looking for cigar butts, he started looking for unsmoked discarded cigars, which means companies with high quality and honest management and good future prospects, but more importantly, that were trading below their intrinsic value. Because as Buffett said, in the long run, time is the friend of wonderful business and the enemy of the mediocre. Until next time. That's all for now. I hope you enjoyed the video. If you did, give this video a thumbs up and subscribe to the channel. एक दो चीज़ें मुझे बोली हैं. आप मुझे बताओ अपने comments, अपने thoughts cigar butt investing approach के बारे में. What do you think about it? Have you done it? Have you tried doing this in the past? Because personally, I have never tried it, and I don't even think that I'm going to try it. So you tell me, have you tried it, or have you purchased stocks through this approach? Let me know in the comments. दूसरी चीज़, how did you like the act that I did in the starting of the video? Did you like it? Do you want me to do more of it? Or like, no, just let it be? Third thing, by the way, I do not smoke cigarettes. I had to specially get this one from the nearest store, and the shopkeeper was looking at me like, मैडम सिगरेट पीती हो? Anyway, that's all for now. I'll see you next time. तब तक के लिए नमस्ते, bye bye and take care.